Hey all, today I'm going to be giving you some suggestions on how you can best spend or invest your stimulus money from the potential second stimulus package. This video will be really useful for you if you're a bit nervous about the current market situation and you're wondering how best to use your stimulus money. This video will be most helpful to those in the US receiving a one-off stimulus payment, but it's still also very applicable to those in the UK on the job retention scheme. And if you're interested in investing in either the stock market or in property/real estate, please subscribe to the channel because I make new videos on these topics 3 times a week. Now let's get into the video. Firstly, let's start off with a bit of background information. On Friday the 22nd of May, Congress and the House announced that they think that a second stimulus package is absolutely necessary. The Republican Senate also agreed that a second stimulus package is likely, but they do want to evaluate the results of the first stimulus package before they jump to any conclusions. The first stimulus package was announced back in March when unemployment was around 4 or 5%, which is about 6 or 7 million people. And that's quite fair compared to 2008-2009, where 2 separate stimulus packages were announced when unemployment hit 10%. But as we all know, in April of 2020, unemployment was at a record-breaking 14% and is likely that it could go up as high as 23% in May, which would be over 39 million people. And therefore it's believed that a second stimulus package is absolutely necessary and we could potentially even need a third. At the moment, it's looking like the second stimulus package could be quite similar to the first, being $1,200 per person or $2,400 per married couple, with additional stimulus for other dependents and children. But obviously this time being focused more towards the people instead of being focused for businesses as well. And therefore it's looking quite likely that the current package is going to be in the range of 1 to 3 trillion instead of being any higher. But I would also say that based on the current unemployment rates, especially if unemployment does reach around 23% in May and continues to get worse through June and July, I'm sure there is potential for this second stimulus package to go even higher, or the introduction of a third package. Now a lot of you might be wondering how best to spend this stimulus money. And I think the absolute worst thing that you could do is to leave the money in your bank accounts and do nothing with it. This is because the US is printing loads of new money at the moment, which means that inflation is quite likely to rise, especially as interest rates have been cut so low. This means that for every dollar you have, it will be kind of worth less because all of the products around you will start to increase in price, meaning that the $1,200 you have in your account will buy you less in the future, especially as you'll be earning such little interest on your bank account as well. So I think it's really important that you make the decision early as to whether you're going to spend it or invest it. Now I think a lot of people aren't necessarily going to be in a fortunate position where they get to choose what they spend their stimulus money on. A lot of people are going to find themselves unemployed with bills that still need paying. And in this situation, I urge you to think about the people that are around you and spend money on the necessities. And by that I mean to make sure that you've got enough money in your account to continue paying your mortgage or your rent for a few more months, to continue feeding those around you, and to continue paying the water and electricity bills. Hopefully soon everything will go back to normal and you can then start thinking about spending money on entertainment and other luxuries and other enjoyment, such as going for days out or going out for meals. But that time probably isn't now, and you probably need to think about the essentials and take more of a survival instinct approach. But if you are fortunate enough to still be working or to have very good cash reserves, how best could you invest this stimulus money? You could be considering investing in the stock market, and there's a number of different ways you could do that. One way would be to invest in a tracker fund, such as the S&P 500. But at the moment that might not be the best idea. In 2008, the S&P 500 returned a negative 38.5% return, which means that it lost a huge amount of money. Therefore, you might be better off making your own sort of selection of stocks from companies that are continuing to do well and continuing to trade during the lockdown. Some stocks like Netflix or Apple or Amazon are obviously still doing really well because they almost kind of benefit from you being inside a lot. Therefore, it might be best to obviously just kind of pick some of these stocks that are actually benefiting and almost increasing profits during the lockdown. But I think it's also really important to diversify your holdings in times like these. And what I mean by that is to not put all of your eggs in one basket in terms of stock selection. You might really like Tesla as a company and as a stock, and so do I. But I think that any kind of company at the moment, even Tesla, could go through financial difficulties. Therefore, it might be better to split your stimulus check into multiple different pots and invest in say 5 or 6 or 10 or 20 different companies. Maybe you could invest into some media stocks like Netflix, or even some tech stocks like Amazon, or even some food kind of related stocks like McDonald's or Domino's, just effectively getting your fingers into multiple different pies, as it were. And by doing that, it should hopefully help you minimise your risk of losses, because obviously if one stock is impacted and starts to really struggle financially, that won't be your entire stock holdings decreasing. It'll only be a small portion decreasing, while hopefully everything else starts to increase as the time comes. If you've enjoyed the video so far and want to see more stimulus related videos or stimulus updates, please let me know in the comments below. Another kind of investment that you could be considering is investing your stimulus money into gold, silver, or other commodities such as oil. This could be a really great idea because these kind of commodities don't tend to follow what the general market is doing. During a recession, most stocks and indexes like the S&P 500 or the Dow Jones or the FTSE 100 tend to fall. And this is caused by lower consumer spending during a recession. And this means that companies' profits get impacted and aren't as good as they usually are, which means the value of their business and the value of their stock reduces as well. And that also has an impact on other things such as interest rates and gilts and bonds as well. You can therefore combat this by investing in commodities that have a fairly consistent value and aren't impacted directly by customer spending, as they have kind of their own store of value or their own separate kind of metrics of working. This could be a fairly good way to store your savings to prevent you from losing money. Or your savings could even increase, because obviously you'd still hold the same amount of gold, but your currency, such as pounds and dollars, might devalue, and therefore it would take more of the currency to buy the same amount of gold. So therefore, let's say you bought $100 worth of gold, you could end up selling that for over $200 if the dollar halves in value. A third kind of investment that you could make is in property. Now this might be a longer term play, because obviously the housing market could be in for some turbulent times. Check out my other video on whether the housing market is about to crash. There's also a number of different ways that you can invest in property. If you wanted to limit your investment to a few hundred or a few £1,000s, you could invest in a REIT, which is a real estate investment trust, such as Cardone Capital. Video coming soon. Real estate investment trusts can be good, but the returns are often much lower, because the fund's expenditure is deducted from the revenues before the profits are split back to you. Therefore, it's always going to be better to invest in property personally and to buy a rental property or do a property flip, because out of those revenues that you generate, you don't have to deduct a whole load of different expenditure, such as office rental costs or marketing costs to market the fund, or salaries for admin staff and sales staff, or private jet expenses. But the obvious downside is that it takes a whole lot more time and money to purchase your own rental property and to manage it, where you could just invest as little as $100 in a REIT, and it's all managed obviously by the fund that controls the REIT. You could also be considering investing in different currencies, such as the euro, pound, dollar, yen, or any others really, or even digital currencies like Bitcoin. And I've got a link down below where you can sign up to Coinbase and buy some Bitcoin. And this link will give us both $10 of free Bitcoin if you spend over $100. A final investment that you can make, and it's going to sound really cliche, but it's to invest in yourself or invest in a business. If you've wanted to complete a professional qualification, now could be a really great time, because you don't have those distractions of the world around you, and you might be unemployed and have a lot of spare time. Therefore, you could take an online class and do online study to be a CPA or an accountant or an estate agent or any other kind of profession just like that. If you've always wanted to start a business or invest more capital into a current business so that you can be your own boss, maybe you've got a really great idea for a new app or a new product or even an existing product, but you reckon you could do it better or make it faster or waterproof or lightweight or something like that. Now might be a really great time. And finally, the last way might not be to invest it at all, or to spend it on necessities if you already have those. It might be to think of those less fortunate. Some of us are fortunate enough to be employed full time and have cash reserves, and therefore not really need the stimulus check. But I'm sure you know from the media that there are millions and millions out there that are currently unemployed. Some of those might not even be eligible for a stimulus check or for job retention payments. Some of those that are non-residents or recently commenced employment or were unemployed at the time of the outbreak might not actually be eligible and might currently have zero money. These are the kind of people that are going to be struggling more than ever and could really do with your help. Therefore, if you do find yourself in a fortunate position where you don't need your stimulus check, It could be to try and donate it to those that are in need. If you've enjoyed this video and want to learn more about investing, then be sure to watch some of my other videos. Alternatively, subscribe to the channel and ding the notification bell. That way, you'll be alerted when I upload a new video. Cheers.